see by exact time it's 5:18:25 seconds on the 21st of January 2013, and it's Martin Luther King Day in the US, so volumes are less, the Americans are off, and the markets are quiet, and that means there's no volatility. Seeing my RSI reversal setup strategy basically aims to pick intraday tops and bottoms. Seeing price has been effectively in a tight range all day. I've had very few opportunities. There's a few things that I've spotted that I could have had that were low probability but I didn't take. And there's one important thing that I missed that I can show you that I shouldn't have missed. Overall, I look at markets with a top-down approach, which I call a fractal market analysis, like perspective. I look at the daily chart, hourly, 5-minute charts. But then I go to the 1-minute charts when price is on a key level where you could expect a possible price reversal. If there's no change in momentum in the 5-minute chart, meaning an RSI divergence, then I can go to the 1-minute chart. If there is a signal in the 1-minute chart, but not the 5-minute chart, I call that a low momentum price reversal. If there are strong signals in the 5-minute and the 1-minute charts, I call that high momentum. And generally the signal will start after the signal from the higher time frame, and then if there's signals in 3 time frames, such as the daily, the hourly, and the 5-minute, then I call that fractal divergence. It just means there's triple divergence. What that means is that when you drill down to the exact level in increasingly shorter time frames, there is a drop of momentum which shows the market is slowing down as we approach that exact level, which basically means to a high degree of probability there more than likely might be a price reversal, because you're seeing the signal at a point of what I call price instability, where a price reversal is possibly expected. It's all very logical. Increasing the probability and adding an edge to this, because effectively picking market bottoms and tops is very difficult to do. However, it offers a high reward to risk ratio. Some would call it impossible, but they obviously haven't read my body of work. Can I trade this strategy consistently profitable yet? No. Have I been trying? Yes. How many years? 4. But it doesn't mean I'm going to give up. Thomas Edison once was asked by a reporter after he made 7,000 or 8,000 light bulb prototypes. The young reporter asked him if he felt like a failure, and Edison supposedly said that, well, no, of course he didn't, but he also knew definitively that there were 7,000 or 8,000 different ways that a light bulb most certainly will not work. So, anyway, I hold this supposition that price reversals can be ranked on a probability distribution function from very high probability to low probability, and that is based on 3 things. It's based on 1, the delta RSI in the classic signals. The higher the change of momentum, the higher the change of RSI, the greater the change of momentum, which makes it more probable a level will hold. The stronger and more acute a signal is, the better the probability. So if the signal occurs over a short duration, then it has what I called a high PD value of price deceleration, which price deceleration comes from classical physics. Acceleration, which is just the change of the x-axis divided by the change of the y-axis. So, when I contrast the change of RSI to the change of time, it's the same equation, because RSI is a momentum oscillator. It's synonymous with velocity, so to apply it to financial markets is a fair thing to do. At least I believe so. So when PD values are high, the edge is increased, the statistical edge that you found in price reversal. And then the last thing, there's 2 other things I do. I try to combine as much market structure in one place as possible. It's called confluence. So I look for multiple levels lining up in the same place. And then I do all of this across multiple time frames, looking for these signals. Oh, and the fifth thing I do is I look at the correlations to make it further complex. So I'm looking at oil, S&P, and Eurodollar, and I'm looking at the correlations of momentum change. Because they're risk assets, they move in sync with each other. So when oil and, say, Eurodollar are on a strong technical level, when they're both putting in a unique bullish or bearish RSI divergence more than 5%, then again the edge and the odds are increased that I found a good point to bind to the weakness or sell into the strength. Does that make any sense so far? Well, of course it does if you know technical analysis, but to the layman or the beginner who doesn't really understand how to look at a chart and analyze it across multiple time frames, then I know from feedback from my friends that when I make these videos I tend to talk a little bit quick and yeah. So let me show you two examples. And there's beauty in markets. There's chaos and there's order. You just got to know where to look for the order. So this is cable, pound to the dollar, 5-minute chart. This is the day high. And you can see that from this peak to this peak, time n and n plus 1, n is just an arbitrary polynomial. It's, a point in time. It's just a convention that I can talk about these peaks. You can see at time n plus 1, RSI's dropped 12.3%. So RSI should have made a higher high with price if momentum was constant. But on this leg up, we've slowed down on its rate of change. So although it's not on a technical level, it's what I call naked. There's evidence of our price reversal. So then I drop down to the lower time frame. So I'll show you the 1-minute chart in that exact location. So this is the 1-minute chart. So there's 5 times more candles. This is where the signal was formed in the 5-minute chart between here and here. But now look. In this peak right here, between this peak and this peak, we have a new time n and n plus 1. This is the n plus 1 from the 5-minute chart, but now we have a drop in momentum in the 1-minute chart, so that's suggesting there's going to be a price reversal, but it's naked. It's not at a point where you could expect a possible price reversal, so the probability is lower. And then if I unlock it, and I'll zoom out, I'll show you, we came off. That's why I showed it to you. But I scroll the chart back, so we're trying to eliminate hindsight bias for the purpose of you or anyone understanding or learning a strategy that I've formulated. So here's the 5-minute chart. You can see we come off quite nicely. We come off from, spot 5894 all the way down to spot 58, 50 ticks right there. So that's a naked high momentum price reversal. Now let's look at the bund. So again, we look for momentum changes at points of price instability or structural points. So 5-minute, this is the 15-minute chart. This is yesterday's low. To the high, we put a fib level on, as you should do for all swings, and we've come back to the 50% fib level, where you expect possible support. And the strategy entry long for the day was the 1430 handle. But look, there's a little bullish divergence in the 15-minute chart, and if we get my little cursor value on it, I can tell you roughly that in the 5-minute chart, it's roughly like 9%, so it's greater than 5. So now, if we drop to the 5-minute chart will just be a magnification of that signal. So look, here's the 5-minute chart. So it's the same signal because it has the same time n and n plus 1. So it's just the same signal. So RSI goes from, look at the cursor value, from 14 up to 26, so 12%. And then if we drop down to the 1-minute chart and look right here for another momentum change on the 50% fib level, look, here's the 1-minute chart, same place on the fib level, and now look, the last little bit of price action is a little bullish diversion, and RSI climbs from 24 up to 35, so 10%. And then if we unlock it and scroll ahead and zoom out, we've bounced. So there's the fib level, and we bounce, not much. We bounce from 142 spot 87 up to 143 spot 15, so 30 ticks. So then you can read about this stuff. I'm reading Scientific America's recent thing on autism and technical mind. I'm at tiny.cc/PDRSI. And that's where you'll see an example of my fractal divergence formulation of momentum change on my Twitter feed, Kite Frog at Twitter, and you're going to look at this post for today for January 21st. It's a high momentum. It's a very high momentum fractal divergence. You can see hashtag twitdoc.com/1QOP if you just want to go to it.